today, the day before.
Yeah, it's
Like
nuts, huh?
it's been nuts. Yeah. Uh,
Nuts.
it's, it's been fun though. It's negative gamma environment. You get big
Yeah, yeah,
moves
yeah.
in
And
both
I don't know if
directions.
you saw McElliott note today, but he thinks it's going to get wild because of Nvidia.
Oh, really?
Yeah, because of the
Yeah.
options in Nvidia.
Interesting.
What do I got to do here? This here.
Perfect. Perfect. So I got Mr. Jesus with me here today, and as usual, we're gonna take a couple minutes in the beginning here just to show you guys some good stuff from the newsletter that has been going on over the past day or so. So today we are gonna move the focus away from the scenarios and the levels that we have been pointing out over the past couple weeks, and we are going to go to Jay's home turf, which is the flow. And I was
Okay.
just actually mentioning to Jay that I think it's a little bit unfair the picks that we are giving you guys for $29 a month, because what we're really trying to do is give you the best of the best action. So if you're scrolling about halfway down, little further maybe in the newsletter, you're gonna get a section here that is called Notes from the Desk. And here we're pretty much trying to give you the cream of the crop of the orders, and it's actually what ends up being on the top bet list that Mr. Jesus posts at the end of almost every day. So, Jay, for the people who have never seen or heard about the top bets, can you give us a little bit more info about that? Like, what does it actually mean when something is a top bet of yours?
Yeah, so the top bets, obviously we spend anybody who's been on these webinars or is a Steamroom member or has been a Steamroom member knows we spend a lot of time talking about how you can't just throw darts at any call buyer with size because there's a lot of other things that go into the makeup of positioning, right?
Hmm.
And so the top bet list is simply put just a cleaner look at some of the top new action out there, right? The stuff you want to
Okay.
pay attention to, the stuff that, if you want to label actionable in the sense, or could be actionable, but you definitely want to keep an eye on it. So it's cutting through a lot of the noise and sifting through that noise to take out the best of the order flow for that particular day.
Okay. So does that mean that I could just take all my money and buy everything that's like
Yes,
on the top best list? That's
yes,
how it
yes.
works?
Not
It's that
only that,
simple?
yes, not only that, you should probably go rob a relative, take their money, and wherever you can, rob a bank and use all that money to buy weekly calls.
Perfect. Perfect. Okay. And if I wanted to do a little bit more conservative way, how would I do it then? Like, what's, for example, you hear about, talking about the spot often. So for people
Yeah.
who haven't heard about the spot, like, the order flow is one thing, right? But another thing that's quite important is going to be the spot, right? So
Yeah,
what's the
so a
spot
lot of
and how would you approach
times,
it?
and I'll give you an example. So, a name that's been up for 2 straight weeks and has been seeing nonstop call buying,
Hmm.
aggressive call buying. I'm not going to put, no matter what type of or size bet it may be, I'm not going to put a name that catches action 2 weeks into an extended move on the top bet list. Okay.
Okay.
Because obviously, why are you paying attention to that bet and ignoring 2 weeks full of action that was at a much better entry? Right. So,
Hmm.
a lot of times, like even the more popular names people pay attention to, I
Hmm.
will put action that I feel is noteworthy, but not only noteworthy, comes at a decent risk reward spot at a consolidation or a pullback in the stock. And that's what makes it more appealing in a sense. You
So
understand? So that goes
yeah.
into, sifting out a lot of the noise throughout the day and, kind of orchestrate this top bet list. It's not just the action, it's, the name that's catching the action and where the action may be coming in. Um,
Hmm.
has a lot to do with it.
Yeah, so you're almost like a filter there, where if a good looking order comes in, but it's like a very, very extended, you're not as likely to put that on the top bet list, and we're not as likely to include that in the newsletter as something that comes in, like at a major support level, because these are mostly going to be calls because,
Yes,
Jay is a
yeah,
long
they're
only.
always calls unless we are in a full fledged bear market once in a blue
Hmm.
moon.
Hmm.
But all calls, and I think on top of that too, when you see a lack of names on a top bet list, it tells you a lot about the market environment, and you could take away from that would be a more cautious or bearish approach to the environment. You know what I mean?
Mm.
So
Hmm.
that's kind of, you guys know my game. That's my short side, right? If is cash, that's my short
Yeah.
position.
Yeah.
So that's also a signal in itself. But I think the main thing, Norse, especially for non-members, right? If you're
Hmm.
members of the
Hmm.
Steam Room, I think the newsletter, in regards to the flow we're talking about now,
Hmm.
is if you're not around for that particular the day before, or you may not have noticed a certain name that caught action. So it's kind of a refresher, a reminder for
Yeah.
members. For non-members, I think what it is an idea generator, a watch list.
Hmm.
So
Yeah.
if you see a name that's on in the newsletter, um, and you've been targeting the name or eyeing the name, looking for an entry, that could be a nice kick in the ass for you to get long, being that it's being mentioned in the newsletter for noteworthy action at a decent risk reward spot. So that's where I
Exactly.
think they'll get them. People will find the most value, non-Steam Room members, from that
Exactly.
information.
So instead of robbing the bank and just buying everything that's in the newsletter, a much better approach is like, if there's something that you like technically that you've been looking at that's coming into like a resistance level or a support level, I mean, or a pattern that you like, and then all of a sudden it gets mentioned in the newsletter, that's probably potentially a trigger for you to actually get long that name, right? So what was it
Yeah.
about this? This is the one from this morning, actually. So this is the top bet from yesterday. It's AGI. It's a gold miner, and we have what's called repeat January buyers here. So what was significant about this? What does it mean when it's repeat? And how can we compare this to, for example, this other order here where it's just a single September bull bet, but it is an opening order? So if you could
Yeah,
talk a
yeah.
little bit about repeat orders and opening orders.
So yeah, so the gold miner in particular, yesterday we started to see gold miners have been um a pretty hot group in regards to flow. You guys have heard me complain about the flow pretty often enough over the last few weeks. But going back, throughout the year, gold miners. You guys know I'm long. I'm still long gold. I was long the gold miners. I took profit there, but there's been some nice action there. A few names in particular have seen the best action. Newmont Mining, NEM. Um, AGI is a name that's caught action that's on the list here. So what we started to see as buying has crept into this market here over the last couple of days, and more so yesterday, we saw some of these gold miners catch sweeps. This
Mm-hmm.
one was one of the better looking gold miners, sweeper wise, that caught some action yesterday, and that's why this name in particular was pinpointed. A name that we've seen action in before, but if you pull up a chart, and I think it had a nice day today, right? But if you pull up a chart,
Yeah, let's
oh,
look
there
at
you
the
go.
AGY real quick. I mean,
Yeah, AGI.
come, come on.
Yeah.
That's
So you could see, right, the name's been strong, and as opposed to and it probably was catching sweeper activity into that prior rip in August, where it was up for literally 2 weeks straight. Now that
here.
it's pulled back and has digested that move, found a low, and now you
Hmm.
got sweeper interest. Where now you got, for at least a trade, it's a better risk reward, quote unquote, spot, as we like to say.
Yeah, so there's a big difference between orders coming in, up here than orders coming in down here, is essentially what you're saying.
Yeah, and again, the edge from, at least the way I look at sweeper activity, is not there's not a whole lot of edge when something's bullish going higher and everybody's buying it, and you see call buying. That's
Mm.
that's normal. That should be happening. But I think there's a lot more info in the information you get off the flow if a name has been consolidating, has been quiet, or has been pulling back, and then you start to see buying show up after it's dried up for a time being. So,
Exactly.
turning points in a sense where momentum starts to shift, that type of thing.
Yeah, and the way that I like to think about it, it's like if I'm doing my own research, if I'm looking at technical patterns, support zones, and whatever, and I think I have a good idea. For me, the sweeper activity is basically someone with more money, more information, and probably more skills than me that's looking at that same idea.
Yeah,
So
exactly.
that for me is like, okay, now you have, now you just don't not only do you have a favorable technical pattern, you actually have sharp money placing a bet on the same thing or the same idea that you're seeing, and that's a nice confirmation signal. And of course, it's not going to be like every name we put in the newsletter is going to go up, a gap up and go up 6% the next day. That's absolutely, not what we're saying. You have to look at like what's the strike, what's the expiration. But that's the cool thing about options. Like you get so much information. Not only do you get timing that someone is placing a bet on this name right now, but they're giving you the expiration and the strike price, which is also, giving you a lot of information. It's like, where do they think this stock can go and within what time frame? And that's why, sweeper activity is so helpful at times.
Yep, yep. And there's so many ways. Again, to use the information, you can use it as a confirmation indicator. You can use it as an idea generator. Another way, and I know a lot of traders who I've traded around who use it this way, who maybe aren't around a screen all day long. Let's say you are interested in the gold miners just as a group. It's
Mm-hmm.
something you talked about over the weekend with colleagues or friends, and you're looking for a particular name. So in other words, you would look towards the newsletter and see, all right, let's see if any gold miners happen to, if the steam room happens to find any gold miners that are seeing some aggressive activity, and then you see one of those gold miners, two of those gold miners show up. And
Mm-hmm.
that's something you're already prepared for, and the work's been done for you. Right now, you have not only a gold miner, but a gold miner that's in place, seeing buying, that, like as you mentioned, professionals are putting money behind. So again, something you can already be looking for, but the idea comes from the flow itself.
Yeah, and the flow tells the story, right? So that's the
Yep.
cool thing about it, that you could sort of put together a narrative and the story from what you see in the flow. So hopefully, for the people who are not members of the room but are watching on the flow show, you'll probably see some of the same names that Jay talks about on the show mentioned in the newsletter as well. And if you want some of those picks more in real time, it's like I'm gathering these bets at the end of the day every trading day, and then it goes out the next morning. So this is an example of what went out this morning. And not only do we have the top activity from Jesus, we also have Ranchero, who's familiar with Ranchero, who goes live on in our room twice a week, and he talks about swing ideas, condor ideas, scalp ideas, and leap ideas as well. And what we will do for you guys is pull out some of that activity and share with you guys. And this is an example of that, where Ranchero is in a long-term position in Illumina. So if you've been a subscriber of the newsletter, you have been able to follow along on that. He was also talking about NVIDIA yesterday, about a potential gap fill. He did this earlier in the day. So by the end of the freaking day, that gap was already filled, right? So when this
Yeah.
went out this morning, the gap was filled. But he is talking about, potential continuation here, and looking at those 117 strikes for next week as a possible good trade. And here we also have a condor suggestion, right? We have Qualcomm as a suggested condor, where you're even given the wings of the condor suggested to you for balanced risk here. So I think this newsletter is way too cheap. I think each of these sections are probably worth $29. But as we've mentioned before, we wanted to go out and create the best news, like $29 newsletter out there. And so far we've been having really good response, and maybe not every section is for you. That's totally okay. You can pick and choose. Maybe you just want the levels. Maybe you just want the gamma updates. Maybe you just want the flow from Jay. But I do think there's a little bit for everyone in here.
Yeah,
And
exactly.
yeah,
Exactly. You don't need it all in there, Some people use the majority of that information, but again, I think especially if you're a part-time trader and not in front of the screen all day long, you could find some decent value out of it.
yeah. So I'm gonna drop the link to sign up for. You get first 7 days for free. Then it's $29 a month. After that, it's wallstreetjesus.com/brief. I just dropped the link in the YouTube chat, and yeah, hopefully you guys will either sign up for the newsletter or even come into the room. So that's it for me today.
All right. Thank you, Mr.
Enjoy
Norris.
enjoy the rest of the show, Jay.
Yep. Have a good night, brother.
Thank you. Bye.
Bye-bye. Let me share my screen now, right? Yep. All right. Let me just get a couple of these charts. Senga! Hi, Senga! I love it when you guys call me Senga. What?
Remember to flip the toggle button on your
Didn't
screen
I?
there. You turn it on, and then on the left-hand side, you have the toggle. You just got to turn that on to like actually activate your screen.
I did. No? This is my toggle.
No, the other one. That's your volume or your microphone, and then there's one
Where?
below it, above it.
Oh,
it
this?
shows. Yes, there you go.
Oh, it's two separate. I didn't know it was two separate things like that. Okay. There we go. I'm clueless. All right. I wanted to. I didn't get a chance to just get some of these charts quickly, but I guess I can pull them up quick. What were the ones? Oh, yeah, there were a couple I wanted to go over anyway. All right. So, how's everybody doing anyway? Let me get. Shoot. What's up, Tobias? How are you? All right, let me just do this quick. It takes me 2 seconds instead of being all disheveled. So let's go here, and let's go here. All right, so there are a few interesting things I just wanted to touch on today. A little bit about what we're seeing, what's going on. Give you guys an update on in regards to flow, which we were talking about a little bit before we hopped on here, but kind of keep you guys up to date on what the flow's been looking like. Hold on, what did I do? Okay. And a few things that are out there that I think you guys might find interesting to just keep an eye on that could end up being important here. And we'll look at obviously some of the big picture stuff that we always do on this webinar. That's what I'm doing right now. Okay. The only other thing I want is hedge funds and individual names. I want to, because we got an update on that this morning. All right. Here's hedge funds. All right, so just to rewind here. What's up, Struck? How are you? Yeah, it was a crazy session yesterday. It's funny because we don't have that as many. We used to have a lot of those sessions. I guess you have them more in bear markets. I think that's kind of why. But when you look at it realistically, it wasn't that nuts. I think what exaggerated it a bit more was that you started off higher yesterday. It kind of made sense what was going on. We talked about that yesterday, where you had a hotter CPI, a little bit on the hotter side, right? So they kind of priced out the 50 basis point rate cut and started to fully price in a quarter instead. That you would likely see in the price action more of a rotation into some of the larger cap, mega cap, maybe the AI themes, and away from the stuff that benefit more off rate cuts, the more economically sensitive stuff. So we kind of saw that out of the gate. Nvidia was hot right off the opening bell. If you remember, the CPI came out, the market sold off a little bit. They bought it right up. By the time the open, I think we were green, and you had NASDAQ leading a push higher. Then what was the monkey wrench that was thrown into the mix there was that you had this flush that really showed up out of nowhere and took a lot of people by surprise, right? Ahead of the NVIDIA conference, which everybody was getting excited for. So then you had this flush that came out of nowhere, took people by surprise, and started to accelerate to the downside. And then ultimately what happened was they just bought that back, and you were, after that flush, you were right back to where you were that off the open in the morning. NASDAQ led rally, NVIDIA led rally. So I guess what I'm getting at is it ended up being the proper move for the reaction off the CPI. It's just how we got there, which was a little funky. I think the flush was kind of the outlier there. But anyway, it did get a lot of people excited yesterday. All right, so I have some of these. Let me refresh this. Okay. All right, so let's talk about just the last couple of days, and I guess that'll be a good segue into the flow, and then some of the major signals we look at. So what we had, I think the last time we spoke on this webinar, and I'll rewind it to that point anyhow, we talked about how you had this snapback rally, remember? And we were kind of up here now. And we discussed on this webinar, if we continued higher right from that point, okay, that wouldn't be a bullish thing. Okay, that would be more bearish than anything else. That would create more risk than anything else. Why? Because all of the good that this washout, the first initial washout created, okay, was basically going to get all wiped out and get everybody long and chasing again if you had continuation through this exhaustion area here, right? We talked about how any index you would look at, you had upside niners, right? Kind of signaling where things probably should get tired on the upside, being the move was too extended. A lot of the big names, the semis, the small caps, you name it, they were all flashing too extended and exhaustion signals, right? So what you would like to see, right, especially if you're in the bull camp, is the complete opposite. You don't want to see a push through those stop signs, as we like to say. You want to see some digestion at the least. And that's what we kind of got, right? We kind of got some selling once right out of this little sideways chop here. We got a little bit of selling here. And then eventually we found the bottom, and now we're on day 2 of kind of a snapback rally, right? So what's interesting is, for us to get that reset, right? We all talk about that reset, okay? That reset where you get everybody flushed out on the long side, right? You create that wall of worry where people think it's the end of the bull market. Positioning starts from fresh. And that's where you get a real nice runway, right? Once that selling dries up and that momentum starts to turn, okay, you can play off those levels for a good portion of time. In other words, you can get long and you don't have to worry about selling the first move because the rally may roll over and you see another sell-off, right? The majority of the selling has been done. Positioning has been flushed out completely. For us to get that, okay, we either needed this to chop around and roll over at least one more time, or we're going to get something that takes more time, right? So, in other words, you get something like we were looking at the 2018 example. Remember, we were looking at that where you had a pretty aggressive snapback rally. It almost, you had like stability for a good month and a half, 2 months. And then ultimately, the market, after chopping around a little bit, rolled over and actually tested the lows again. Okay. So we were looking at that as an example. Again, I'm not saying this market's gonna play out the same way. They never do, unfortunately. But you're either gonna get where the selling intensifies right out of the gate, or you get selling stability, some more selling, and then that usually gets the job done. Okay, usually. So I kind of think we're in that mix now. Okay, and for those of us rooting for as close to a reset as we can get, um, we're in that process. Okay, we are in that process now. What can go wrong in that process, if we're looking for that, is you get a move to new highs here, and you get that FOMO chase and melt up, right? Again, for me, as a long only player, and I lean bullish, as you guys know, right? That's not what I want to see, okay? Because that will only create more risk. That doesn't make me feel any better about the situation. That makes me feel worse, okay? But obviously, there's the possibility of that scenario. Nobody knows what the hell this market's going to do. But I'm making the point, if it does happen, I'm not going to feel good about that, right? So that's something to keep an eye on here, okay? We want this to continue at the least here. We want this to continue over the next month or two. You kind of get some range bound trading. You get what looks to be extremely bearish at times. Sometimes they feel bullish and the snapback rallies, but ultimately it chops a lot of people up, gets them frustrated, and that round of weakness you do end up running into for a couple of weeks usually will get the job done in flushing out a lot of the positioning. Because again, the time of the process, it takes time, right? If you don't get the magnitude of the selling over a short period of time, it usually takes a decent amount of time to get that process done. Okay. So I think we are in the middle of that, right? And that's at least the approach I'm taking here. Okay. What I'm paying more attention to, as we discussed and as you guys know, is kind of what type of buying are we seeing in this process? Okay. And I'll give you an example. If we're seeing ideally what we all would want to see, and we talked about ad nauseum on these webinars, if we started to see new buying in fresh names, fresh setups, right, that haven't been seeing flow and are at good quote unquote spots, as we like to say, that would be really, really great, right? Because even if the indexes did consolidate over the next couple of months, we could find alpha in these pockets and in these names while the indexes did nothing in a sense. Okay, they would outperform. You see, right? So you would see that often when we would see aggressive flow in certain areas. They tend to do better when the market's not rallying. Okay, so that's the thing I'm kind of focused on and keeping an eye out for. Right? Is there any buying? Where's the rotation going? Are there new AI names that they're coming into or that they're starting to nibble on? Are they buying defensive names, which is not necessarily a bullish thing? Or are they buying the same shit? Right? And that, to me, is the worst case scenario. Right? If they come back for the same names that have been littered with buying all year, okay, that is the worst case scenario. Okay. Why? Because that could last. It can last longer, like we talked about, a lot longer than we would like. But ultimately, the end of that story doesn't end well. Okay. It doesn't end well. There's only so much aggressive buying that can come into the same names, right? There's only so much of that you could see before the market ends up chewing those players up and spitting them out. Okay. And to tell you the truth, up to this point, that's what we're seeing. That's what we're seeing. And we'll get into it in a second. Mick Elliott, which you guys know, a lot of us follow closely, we talk about on this webinar, actually has been warning of exactly that his last couple of updates. And you've seen a lot of us complain about it. The flow, the order flow, the options order flow in NVIDIA is stupidity right now. Okay? It's stupidity. It's not, it's a video game, right? It's an ETF. It's not options order flow in a stock anymore. Okay? We were talking about it with a couple of Steamroom members because I don't remember Tesla back then being as bad. I'm using the word bad, but as overpopulated, as ridiculous as NVIDIA is now. But some people I talk to who watch the flow or have been in the steam room have reminded me that Tesla was pretty much on this scale. Before, again, that just couldn't last. And what we're talking about, if you remember Tesla, guys, when it fed, on itself in a sense. Okay. So what basically goes on here, right? And you're seeing it in a lot of these stocks. I made the point that if retail or if players in general, if it was as tough to buy calls as it was when I got into the business, okay, you couldn't just go on Robinhood and just press buy calls and end up getting filled. Like, you had to get paperwork. There was suitability. There were compliance offices. Now you can get any shoemaker off the street and he can buy calls whenever he wants, right? So the process is so easy. But, to buy a $2,000 stock, as much buying as we've seen, if people didn't have access to call buying, they wouldn't even be looking at these names. They would have no interest in these names. They sure as hell wouldn't be buying the equity, right? If anything, they would buy the equity and hold. They'd buy their 20 shares, their 50 shares, whatever it is, and they'd sit in it. They're not going to trade it, right? So the options order flow has fed into these big moves that we've seen in a lot of these names. Okay. But eventually, that doesn't last forever. What eventually happens is the same way that generated upside momentum. Okay. The more long in the tooth, the more crowded it gets, the more we see NVIDIA weeklies trading every 3.5 seconds, as you guys see. The more overpopulated that gets, the more you're going to have to pay the piper when that time comes, right? And like according to Mick Elliott, he thinks we're close to that time. He thinks the next two OPEXs are going to be critical to watch to see how this NVIDIA shakes out and whether it has a spillover effect into the indexes, into those particular sectors, and can create some real volatility, right? Some aggressive downside. That's how these flash crashes, right? That's how all these things happen. What do you think happens? These VIX moves, what do? They short VIX, right? They buy puts in VIX, and they keep doing it, and they keep doing it because why? Because VIX just goes down, right? And they make money, and they make money. They continue to do it until that one time where VIX not only trades higher, but gets shot out of a cannon. And now all these VIX shorts are scrambling and have to unwind a position that's been going on for a year or two. And that's how you get these VIX moves from like we just saw recently. All right? So that's kind of what's setting up here in this NVIDIA camp, right? And Tesla, if you remember, I think it was this year, right? If I'm not mistaken. Okay. So when this move happened in Tesla, and if you remember, the word gamma was being mentioned a lot. You guys probably remember, this thing got really out of control. Okay. And a lot of money was made, but I'm talking about in the options world, the flow was just insane. There were millions upon millions of dollars in sweeps nonstop, all day long. Okay, like it's fake money. And that continued. That didn't just stop as the stock went higher. It became more active. More people want to get involved. And then eventually, when that momentum runs out, when that turns, you go through something like this. Now, what's interesting about this is you ran into the bear market of 2022. So I don't know if you want to look at this example of how Tesla gave back the whole entire move. You understand? Because you had a bear market there. But what happens is you're going to see that Nvidia flow eventually end up a lot quieter than it is right now. Right? Like the Tesla action is still active. It's nowhere near what we were seeing back here. Nowhere near it. Right? So you either go through some lengthy digestion or a pretty aggressive enough pull to where kind of balances things out a bit. Now, the problem with Nvidia, market cap wise, exposure wise, it's gotten to the point now where it's got tentacles in so many other things. Right? Like this thing is, tied to the stocks and the semi complex, to other tech names in that particular AI sector. Michele had a couple charts. Let me show you here. Do I have them here? Where am I? How large was the Nvidia stock move contribution to the overall equity index moves yesterday? It was absolutely hilarious. 44% of the return on that day. Half. One stock. Did you hear what I just said? One stock? So, the most interesting thing to keep an eye on here and how this shakes out is what does everything else look like while this goes on? Okay, because initially, if this does happen to an Nvidia, it's going to have an effect on the indexes, no doubt about it. Okay, initially, and it's going to have an effect on everything else. But I really do believe after that initial selling takes place, you're going to start to see real outperformance. And I think a lot of different pockets of the market, a lot of different parts. So, yeah, I'm not the expert into the mechanics of this. I would highly recommend listening to a guy like Charlie McElliott from Nomura, who is probably the best in the business when it comes to this stuff. But he's mentioned you got September OPEX, and then even if it doesn't happen, September OPEX, even more so, October OPEX, to really keep an eye on an unwind here. And by the way, another thing, not to get too wonky here with you guys on the macro end, but another thing in that camp, and you guys have heard a decent amount on recently, is that yen carry trade. All right? That's been a trade that's been long in the tooth, okay, for a while now because of rates, right? You can borrow here to invest there, and you can get away with that for a lengthy period of time because of the disparity between the two economies and rates. And when that starts to unwind because it was going on for so long, nobody knows how big of an impact that's going to have, when that unwind process starts to take place. Because the unwind always is a lot more aggressive and quicker to happen. Right? So it takes years to materialize, but once things start going in the other direction, everybody heads for the exits at once. And that's what creates these flash crash type events. Right? So that yen carry trade has a lot to do with, especially even like specifically the NASDAQ and the move in the NASDAQ over the last couple of years. All right, that trade created that buying in these mega cap Nasdaq names, even when there was no real reason to be bullish of equities. Right? Remember, we talked about how the market was going higher and these mega caps went higher, but it was a defensive rally. They were buying the Magnificent Seven and all these names like they were treating them like bonds. They weren't buying them because the economy was great. They were felt, it was risk on environment, right? They weren't buying it for those reasons. They were buying it because they felt safer in the biggest of companies out there to hide and park money until the climate got better. Right? And that too has been going on for a lengthy period of time. So that's going to be the interesting thing to watch take place here, right? Whether we see it at the end of this year or it's something that gets pushed into next year. But there is likely going to be a pretty loud bang when that materializes. But again, call me glass half full. I don't think that bang is going to be felt across the board in every area of the market. Okay, again, I think initially it will, but I think that's going to create some great opportunities. Even more importantly, I think that gives people the green light to now start looking at other things because of that unwind of that trade. So it's something, again, it's something I think you want to keep an eye on, of course, because you need to be aware of it, right? You need to be aware of it. But, I would, you don't want to jump that trade, right? It's not something I think you really want to be actionable about right now. I think right now what we've discussed over the last few weeks is probably the most prudent approach to take is remain nimble, try to stay light. Because here's the thing, right? You got a lot of things right now that are telling us there really is no reason to jump out of our shoes and get aggressive here. No reason. Okay? If sweepers were lighting up the board in new names and new potential new leaders, okay, then maybe we could say, you know what? You got, seasonality is awful. You got this to worry about. That's not good. You're probably smart to stay patient, but their sweepers are really going nuts here and putting some money to work. Right? We're seeing that appetite. Then make it, maybe we got an excuse to get a little more aggressive than we should. But we're seeing the complete opposite of that. The complete opposite of that. Right? The sweeper buying is extremely selective. All the action still remains in the same old names recycled over and over and over again. Right? And now it's got to the point where a lot of these crowded names, you're seeing weeklies, you don't even see them show up in open interest the next morning. You'll see NVIDIA trade 150,000 weekly calls, certain lines. None of that's carrying over to the next day, my friends. Okay? That's not humans at work there. Right? That's not human beings trading like that. So there's nothing really giving us that kick in the, excuse my French, in the ass to get us to get more aggressive than we should be right now. Right? So you got the flow that's telling you take it easy, stay nimble, stay light. You got seasonality. And that's kind of what McElliot's lining up here. He's putting two and two together where you got this potential unwind in the option world of NVIDIA, and you got a liquidity backdrop late September, October, which is not good. Right? That's just not a good exacta right there. That's not a good combination. So that's why he feels it's imperative to really keep a close eye on the next two OPEXs. Right? So you got not only again that seasonality thing, it's that liquidity backdrop that goes along with seasonality. All right, so you also have that, a perfect excuse to stay nimble, more tactical, more selective. Okay. And, you know, there, I mean, we look like there's nothing anybody is really excited about outside of AI. And the problem with the AI play is it's so concentrated on those particular names, where there's no love anywhere else. Right? And that goes back to the flow. That's why we want to see new action come in. Right? Start to find some of these names that will benefit from this AI. I'm sure it's going to happen at some point. Right? But a lot of these names have already hatched. Now, granted, maybe these names can go higher. Maybe they have another leg higher. I'm not that smart. I have no idea. But they've already moved in a big way, right? Again, we talked about like SMCI. Okay, I don't want to use just that because it's one of the biggest debacles out there, how that ended up turning out. But, when you have a name that's moved this much already, you need a lot to go right for that to continue. A lot to go right. And they're, again, going in, right? Everyone, we all do the same thing, which is a problem. We look at what's in front of us right now, where that information's already digested, spit out. The market has already gone through that a long time ago. Right? So things on the face look really good. The numbers look good. The growth looks good. It's only trading at this multiple, but but one thing goes wrong and the future looks completely different. So we want to focus elsewhere. If you are already in these names, if you're long and you have good entries, that's a different story. Again, we talk about it all the time. That's a different story, right? These names at this point, a lot of these names that a lot of people are focusing on, if you like them that much, they should be owned already. They should be owned. If you're in options, they should have been bought, sold, and rolled. Okay, they digest a month and people are looking for a whole new parabolic move to the upside. Where the probability of that scenario is just not likely. Possible, but not likely. So we want to try to look for potential new spots, right? That's what we're kind of looking at. And it's just the problem there is there's not much. Right. And a lot of the names you guys know, like here's one that's been acting well. Bova gassed it up. This APP. Right. I know a lot of you guys like this name. Okay. And yeah, you can make the argument like you got some real estate here. Right. Because of what has happened to this stock. But, every time we talk about new names, it's the same names again. APP, VRT. You know what I mean? It's the same names. That's what I'm saying about recycled. We keep going back, right? Nvidia runs for a couple of days, the momentum stalls, and now we're talking about money moving elsewhere. Where do we go? We go back to the same other group of names, and back and forth. Back and forth and back and forth. That's what I mean by recycle. Now there are a few newish names. Like this, I think I would put in a newish name camp. I don't know if you guys remember this. This is more of AI infrastructure play. Struck, didn't you own this Struck? I think Struck owned this a lot cheaper. I doubt he owns it now. But I think Mr. William Struck actually owned this name, but I could be wrong. But yeah, we've seen flow in this name. It's been consistent. It's not been a big mover. It's kind of rally, chop around. It's not SMCI. It's nothing of that caliber. But this is what I'm saying on the newer side of things. And this too is still up really, really nice. Yeah, I got shaken out. Oh, but you did own it, right? I remember that. See how I remember that? I remember you telling me that you owned it. I didn't know you got shaken out. Otherwise, I would have never brought it up. I apologize. Um, another interesting name may be this like COHR, which is a Druckenmiller play, right? You guys probably remember this name too. We talked about. The flow's been okay. I wouldn't say it's been jaw dropping. They like to sell puts in this name, and you can see it's pretty wild though. You get these real violent shakeouts from time to time. So you just got to be a little careful chasing this. But to me, a lot of these things right now are trades, right? Because we're not seeing enough of them. As a whole, they're trades. If you like them, you want to look for certain spots, make some money, sell it, look elsewhere. They pull back again. You like it after they pull back for a trade. I don't know if we want to be sitting in you know the newer names, the few that there are, and then you have an unwind like we could potentially see in this group. You're going to feel some pain, and the upside probably wasn't worth it. What I think a better approach might be is trade it tactically, right? Try to make some money. If we do see an unwind and you see a COHR unwind aggressively, that's a much better spot. It's going to be a lot harder spot emotionally, but I think that's a more ideal spot. But that's it. That's it. Right? We talked about like the Bitcoin miners. It's funny because now, like, everybody I talk to, we ask me about the Bitcoin miners. Yeah, I like them longer term. I do. I like them longer term. But you see what's going on here, right? When the big caps get a little too crowded, you get a little leery of them. You go to look to something else where people look, Bitcoin miners, right? It's the same thing, back and forth, back and forth. Nothing new. Nothing new, right? And again, those Bitcoin miners, those power miners, that story's out now. We're not the only ones talking about that group anymore, right? When we were playing those things, even when we started to become interested in them, we thought it was a play on Bitcoin. We didn't even know they were a potential AI, quote unquote, AI play. Now it's out there. It's out there. Okay, I'm not saying that can't find success because it's out there. It's just, going to be a more difficult trade to try to catch a larger move on. Yeah, that's what it is. The AI data center plays. Like that's what a lot of these things are tied to, right? And Goldman, yeah, I give them credit, right? As you guys know, Goldman's been pounding the table on these things. They still like them. They think, even with the recent pullback and some of these things, they like them now that they've pulled back. Some of these utility type names and stuff like that. But again, if we do, I don't know for sure. I don't know how it's going to play out if you get an unwind oven like an NVIDIA and what those names may look like, those type of names. I really don't know. It's going to be interesting to see. It's going to be interesting to see how they shake out. So for those of you who don't know, you have like names like this, VST. All right, look at this though. This is, I don't know, this is a big move, man. This is a big move. But I think, you see what it's doing here? That's exactly what you would want it to do if you want to ever be bullish on this thing. Okay? This is ideal after a move like that. But that's a parabolic move right there. The other one's this. This one was unbelievable. VRT. Now, see what I'm saying here? Like trades, and it's always easier said than done. You guys know that about me, right? It's never as easy as a chart portrays it, or as we may talk about it. Stay tactical, stay nimble. And trading's never that easy. Okay, to state the obvious. But the point I'm making is, you can find trades in here. Even just to trade it. Like if you want it to be more selective, you just got to be. You got to try to pick and choose your spots a lot more. Be a lot more selective. I'd say try to wait for pullbacks instead of chasing. So even if it does constructively trade in a range, those entries is how you're going to make money with it. If you're buying after the move already happened, obviously you're going to get screwed. Yeah, I mean, you couldn't, again, to draw it up, you couldn't. This is exactly how you would want to draw it up for VRT. This is exactly how you would want to draw it up. But, for this to gun to new highs here, again, possible? Of course it is. But, it's not an easy thing to do after a move like this. Like you really need risk on in that camp. Like you really need an appetite out there for this thing after being up so much. Again, possible. It just, again, I bring up SMCI because I felt the same way about it, right? Like here, okay, here's what I'm talking about. All right. And see here, you remember, we talked about it all the time, right? SMCI here, you had this ridiculous move, okay? Absolutely ridiculous. I get it. Fundamentals and everything, they were great. I know all about it. But this move was insane, okay? So now you get, healthy consolidation here, right? Up to that point, that looks totally healthy. Downside niner now, okay? But the point I'm making is, even looking at it back then, for this to go to new highs and rip a new leg from there, that's not easy after just coming off a move like this. Right? Because the more likely scenario, the more likely situation is either lengthy digestion. And after a move like this, it's got to be extremely lengthy. Okay, so you get lengthy consolidation, or something goes wrong and it rolls over. And all these chasers get screwed. Okay, but for this to stop here and just shoot to new highs and rip and go back to its old ways, again, is it possible? Yeah, in 99 into 2000, we saw a lot of names do that. Okay, but you're talking about a unique time, right? I don't remember another time in this market like that. And right, you see what happened, right? So here, you get a bounce off a niner, okay? So boom, you had a trade there. I remember some of you traded. I think we saw sweeper activity. Remember? It was weeklies, monthlies, something like that. But it was a nice spot for a trade. Okay, you had a trade there. 900 to over 1,000. Okay, but if you're looking for new highs and the whole new bull leg higher, whoop! Oh boy! Oh boy! That took care of that. right? And now you're here again, right? You chop around a little bit more, and oh my God, look at this. This doesn't look that bad, huh? That doesn't look bad at all. Look at this. Maybe you get a break of a downtrend here, and you shoot and rally to new highs, and we're back to our old ways. But again, for that to happen after 2 months of digestion, after a move like that, it's not the high probability scenario. It's just not. All right. This, what happened, what this looks like here, this is the highest probability scenario. This, exactly this price action. But here's the risk. While it's doing this, if something goes wrong, you're dead. Right? So while this is going on and it's constructive, if one little thing goes wrong, they miss earnings, a short report comes out, any little thing like that, you got a lot of longs that need to get out. And that's what happened. The other one was this. Ooh, what the hell is... You know? So, these could be setting up again, but it takes time. It takes time. But listen, we've talked about it. I don't want to beat a dead horse. You guys know that. We talk about this a lot. And we talk about it a lot because we're dealing with, unfortunately, we have to deal with this and a lack of new names out there. That's the problem. Okay. But anyway, here's some of the big picture stuff out there. Just so general thing on the market here, right? A couple things caught my eye. Credit default swaps, not seeing anything as far as the big picture credit market signals. Okay, not seeing much of anything there. Little bit of maybe a divergence, not much. Okay, so just basically telling you there should be bullish areas of the market. There should be bearish areas of the market. There's nothing catastrophic out there. That's the takeaway, right, from swaps. Spreads are diverging more. Okay, and here you can see it pretty cleanly, right? So I inverted credit spreads here, and here's the S&P 500. Right from here, the market continued to melt up. You remember we had this discussion, okay? And credit spreads were widening out. The complete opposite of what you would want to see to confirm that risk on. Okay? It doesn't mean the end of the world's coming. It's telling you that the move higher is not healthy. Right? The credit markets, this specifically the corporate bond market, is not confirming it. And it wasn't healthy. It was led by a few of the large, heavily weighted names. Okay? So a lot of times that leads to a rinse, and that's what we kind of got. Right? So, but you could see it goes on for longer than you would like. Like it started diverging here. So you had, more upside there in the indexes. But look what's going on now. Obviously, this is not taking in today into account, but the equity markets have bounced a little bit, and this hasn't really bounced at all. So in credit spreads terms, the equity market has been more bullish, right? Has signaled risk on in equities. Credit spreads have actually widened out a bit. Not much, but they didn't tighten, which they should if it's a risk-on environment. They actually widened slightly. So, bottom line, not confirming the risk-on climate that we've been seeing in equities. And that's not too shocking, guys. That's not too shocking. Because what do we see out there? Okay. It's not a risk on environment. Okay. You know what's at new highs? Gold, staples, utilities, healthcare, okay, and AI megacap. That's a defensive posture. Right? This is, I mean, hey, look at staples. Okay, this is probably the most defensive sector on the board. This is what you buy, you hide in when you're in a risk-off environment. You hide in staples when there's no growth in the economy. Okay? I mean, they've been hiding at an extreme. Right? I mean, this is actually at an extreme now at this point. Utilities. And now if you remember these circles you see up here, as utilities were setting up for a breakout, you had positioning at bearish extreme, meaning it was a really nice long. Because even though utilities were getting ready to break out, nobody was in them. Now there's a total opposite. Obviously, because of this move, more people are bullish utilities. And they become an AI play. Okay, but look, these are defensive sectors of the market that have been leading. So it's not that surprising that credit spreads are not confirming risk on. Right? Oh, good call, Drew. That's probably even a better example. Great call. Look, Philip Morris, man. Tobacco. Right? Or the war stocks. So it's been, listen, no matter what anybody tells you out there, it's been a weird bull market. It's been a strange bull market, because it's been a more defensive bull market, in my opinion. Not a bull market of new leaders, a concentrated bull market, a defensive bull market, right? Small caps not involved, the equal weight lagging. Oh, and I saw an interesting chart. I don't know, Sahil, did you see that chart from Goldman? When you're in like a true bull market, and that's usually like after the Fed cuts rates, you know what group is the best group to be in? What type of stocks? Mid caps have outperformed significantly. Mid caps. And we talk about new leaders, right? Like people always misinterpret when I talk about new ideas, new stocks as small micro caps, penny stocks, because we talk about the Bitcoin miners. No, that's unfortunately, the lack of new ideas, new leaders. Those are the only places where we've seen action. But usually it's mid cap or even large cap, not mega cap. Oh, Sahil brings up a great point too, right? Look at these stocks. IBM, GE. Right? Here's your big winners. Here are your big winners. Yeah, there you go, right? Here's your mid cap. I guess this is a mid cap SN. I got the sun right in my eyes. Look at this thing. It doesn't stop. Oh my goodness. Oh my goodness. Wow. Yeah, so I found that interesting. It was pretty, it was pretty significant because people would think small caps maybe outperform the large caps. You don't really think mid caps, but mid caps, when you're in a true bull market, and a lot of times that comes after the Fed has eased, mid caps are what lead. And a lot of these companies, they're just the environment has not been suitable for them, and there's just not a lot of growth there. Not a lot of growth. All right, so again, I got into that conversation because of this divergence here. So again, just telling us that the risk-on move is not confirmed from the credit markets, not that healthy move. And I think the proper interpretation of that is that it's not going to be long-lasting. It shouldn't be long-lasting. Like, you're probably going to see a little rinse or a washout. And that, it needs to improve before a market can continue higher, trend higher. So that's the main takeaway from there. The Sharpie positioning stuff, again, I don't think it's any major takeaway. They are hedged, okay, so they have hedges on, not any aggressive extreme overall, but they should be hedged, especially off the V-shaped rally we had. Okay, I think the more important clues to keep an eye on going forward is if we do get some selling, how and what do Sharpies do off of that selling? Okay, do they continue to add hedges on into that selling, or do they take their hedges off and get long, which would be a bullish sign, right? So again, we need more information to see how that shakes out. Hopefully, we get that September, October here. Okay. The other thing to keep an eye on is if we do rally, if the markets melt up from here and you get a chase, how aggressive do they get on the head side? They probably get really aggressive on the head side, I would believe. So, and this, I think, again, is the saving grace here, right here. And I really don't know what to fully make of this signal. And I've never had an issue before with it. All right. So these are hedge funds in individual names. Okay. And we talked about this last week. We spent a lot of time about it. The fund buying, okay, institutional buying in individual names has been pathetic. Pathetic. Okay. They are the ones doing exactly what we're complaining about. They have been hiding in the same mega cap leader names. That's what they've been buying. That's what they continue to buy. And they refuse to take risk and start building positions anywhere else. And we see this from all sorts of data. We see it from JP Morgan Prime data, Goldman Prime data. This is Sentiment Traders indicator, which is from the hedge fund research when they report. Right? And this is showing that hedge funds are net short individual names as a whole. Yep. They're short individual names. Now, and here's what I mean with I never had this issue and don't know what to do with it. The instant takeaway when you usually see this in the past is being bullish. If hedge funds are short and the market is showing strength, okay, you want to be long in that environment. Right? Because one or two things are going to happen. One, the market continues higher and they're forced to cover those shorts and get long. That's a nice tailwind. Or the market dips but they're already short and are more inclined to cover those shorts. You understand? So that's a bullish backdrop. But when you break down the information in what they are short, why, what they're holding short, you run into a little problem because the stuff they are short has nothing to do with the indexes. I should say the stuff they are long. Okay, the long side of their book are those mega cap names we're talking about that are heavily weighted on the indexes. So that is not the bullish side of this signal. You understand what I'm saying? Or I made you dizzy? Right? Hedge funds play two sides, right? That's what they call hedge funds. They get long and they get short. They've been getting long semiconductors and mega cap NASDAQ names. Okay? That's what they've been buying on the long side. They've been shorting everything else. Everything else. So what's the takeaway for the overall market? I don't think it's that easy, the overall takeaway. The pain trade for hedge funds, I guess this is the better way to put it. The ultimate pain trade for hedge funds, okay, is if the stuff that's been going higher underperforms and the stuff that hasn't been participating outperforms. That's the pain trade for hedge funds. And that would be an environment that looked like this. Indexes not really going anywhere. They could be chopping around, could be net lower, whatever it is. But under the hood, there's significantly outperformance in individual names. The RSP, which is the equal weight S&P 500, outperforms SPY. So this outperforms SPY. Here. See this? Yeah, probably even more so this. Probably this one. Okay? You see this? This does the opposite and does this. That would be the pain trade for hedge funds. That would be the pain trade for hedge funds. Okay? So think of it as this. This happened. We're here now. This would be the pain trade of what I just showed you. Right? And as you can see, it happens. Now, if you look here, okay, that was what was that? The COVID lows? No, summer of 2020. That's where it started to outperform, or even the start of the bear market, you could say. And you see what happened to the overall market. We were in a bear market. So that's not bullish, right? I mean, look at this. These are the Qs, though. The Qs, I don't know if that's a good example, right? Let me try this one here. Hold on. Yeah, pretty similar. So this right here, this would be the pain trade. But that could happen in a variety of ways. The overall market could go lower and that could happen. The overall market could go sideways, that could happen, or the overall market could trend higher and that could happen. So there's no particular direction, but there's outperformance. There's underperform the mega caps, the crowded stuff underperforms no matter what. Oh, that's even a bigger one. Good call, right? IWM SPY. My God. That's another one. Right? So like this. That's it. See, Sahil, you see this? Okay. This started, let's call it COVID lows. All right. The COVID lows and topped out February 2021. If that happened, those hedge funds would be lit on fire because they have the complete opposite book. And that was a bullish time in the markets. But it felt really bullish. Like that felt like a real true bull market. Right? We talk about that all the time. You had talk about sweepers and new leaders. You had new sweeper names every day. Every day. Every day there were new names to be talked about. Multiple names. Every day there was a new name. They would be done. So done. And it doesn't take long, And then what could happen is this again. And, it would take time before they get lopsided like that. But this has been going on a while now. And now, it's become long in the tooth. So something like this has to happen. I'm curious to what happened. Let me see the post 2000 bubble. What'd that look like? Hold on, I gotta. Wow. So this is the post 2000 bubble right here. This is a weekly. This was my favorite time in the market. I bullshit you not. I bullshit you not. Yeah. And that's the thing, Sahil, right? There's so much. You talk about like money on the sidelines for that trade. You talk about firepower for that type of trade. Okay. You have literally an empty tank you're starting with that's been empty for a while. And if they start to fill it up, you know what the flow would look like when that started to happen? It would be insane. It would be insane. It would be insane. So, but again, when that happens, it's a matter of when. It's a matter of when. It's a matter of when does it start happening? When do they feel it's the time to start putting money to work in these other areas? And maybe it's the Fed. Maybe it's the Fed. I told you, see, my boy really swear he thinks his gut tells him that it's not truly going to happen until this mega cap bubble, in a sense, is over with. Like he thinks it's that extreme that you're going to need a post a Nasdaq 2000 type scenario for that to happen again because of how extreme it is. Because of how lopsided it is. But like I say, if you have your eyes peeled and you're aware of it happening, it's a good time for stock pickers. It's a good time for stock pickers. You could really stand out. Yeah, and they're so expensive. Like to rotate from the Nvidias of the world, the Apples of the world, to go into mid caps. You know what I mean? One little piece you sell off of one, you could buy a shitload of the other. Yeah, exactly. Trillions. But that's what I mean. That's a bubble. No, Sahil? Isn't that a bubble? Yeah, like it wouldn't be a rip. It would be a huge bull market there in IWM. You understand? Rip is not even a proper term. Like a rip comes, it goes, it's done. You understand? This would be a trending bull market where you would have, they'd rip for 3 months, they'd pull back, they buy the dip, new highs, pull back, buy the dip, new highs. And it would probably go on for at least a year, if not more, because of how extreme it is. And the more extreme it gets, I think the more it would have to go on. So, but again, I don't think that's a warning per se, guys. I think that's a good thing. I think it's a good thing. I think that's something you don't run away from unless you ignore it and you just keep doing the same things you're doing now. All right? If you keep buying the same mega cap names over and over and over again and ignore what's going on, you're going to miss one bull market, which is going to be explosive, and you're going to light your money on fire because you're treating something as a bull market, which is not a bull market anymore. Yeah, you're right, though. You could say that about the whole world, right? Socially, economically, you could say that about everything. You could say that about everything from the Fed. A lot of people blame the Fed for this happening, obviously. Obviously. Yeah, they're the first to blame. Um, so yeah, so that's the story, my friends. That's the story. Yeah, I mean, the takeaway from all this, right? And I say this to you guys all the time. When we come on here and we're talking, our discussion is about new ideas, not macro, not, you know, sentiment and positioning when we're in the middle of la la land. When we're coming on here and we're sharing ideas, we're talking about, and you guys too, right? Usually on these webinars, it's you guys asking me about flow you've seen in names that look appealing to you, right? That conversation is almost non-existent now, right? That conversation is, I think Nvidia is going higher again. You understand what I'm saying? Like that conversation doesn't exist anymore. So I think the first real change you're going to see is on these webinars. We're going to spend the majority of our time talking about new names, new ideas, new setups. You introducing me to Shark Ninja and bringing to my attention that it's not a hair dryer, right? Like that's what these webinars and our conversations are going to be like when that time shows up. And it will show up. It's just a matter of when. But I guess the point I'm making is in the meantime, while we try to get to that point, you want to try to be prudent about things. Right? Instead of feeling like you're missing out and trying to make up, like you need to make money because you didn't benefit off this week's rally or whatever. I think you want to take a conservative approach and be more prudent about it until we get to that type of scenario. Until we get to where we're talking about new ideas and a healthier market and a broader market. And again, we're just giving what we feel. Doesn't mean that anything has to blow up. Right? That's just one scenario. Right? A total other scenario is that you're in the start of a new bull market that actually starts off a pullback, whenever it is. Now, October, okay, you get a pullback in the market, and that rally sets off a whole new bull phase where now you're getting new names involved. And that's the sign of just a healthier phase in general. The IPO market starts to pick up. You see more and more names come public, right? You're interested in what names are coming public, what sector they're in, what do they do, what's the new hot pocket of the market, what's the new hot sector tied to AI in the market. It's non-existent. It doesn't exist right now. There's nothing. You have the semis, you have some power names, and that's it. We saw a little bit of action in this. That's why I was talking about it earlier today. We saw some cheap activity in this. I remember this name from back in the day. Applied Optoelectronics. But nothing too noteworthy flow-wise. But it did have some news when it was catching the flow, I think around here. But this is a wild stock. I remember this stock even before this. There you go. Now you look familiar. I remember this stock back here. I remember playing it. Back here. It caught some decent flow and ripped hard. So that's why I remember it. And then obviously it blew up since then and has come to life here. But yeah, that's the extent of it. I mean, what's been catching flow? Well, let's see. What I have on the top bet list today, for example, right? Here's today's top bet list, okay? And trust me, I don't want to throw Google on there, okay? I don't even know if it rolls or not for sure, but it was a clean order as far as I can see. $5 million, Feb 2025, so February 1/30s, deep in the money in Google. All right, so that was one of the top bets. Obviously, a NASDAQ mega cap name. A couple of energy names. Quite honestly, the flow wasn't all that impressive, but compared to what we've been seeing, it's clean buying, I guess is the only thing I could say. BP, not NP, BP, you had December buying. Look what they did to this thing. Like energy stocks, that's the last thing I want to buy. December 32 calls they played. And then this one saw some unusual sweeper activity. It's a driller. GJT told me Elliott is involved here. SDRL. and they opened the largest position of open interest today in October 40s. Both these names, BP has actually done well off flow for an energy stock. This SDRL hasn't really caught much flow in its career. But, if you're interested, you're at a place here where these things are just, they've come in a lot. So even better, maybe they hang around here a little bit and you start to see accumulation. If you're interested, maybe you got a floor to play off of. Right? Again, if you're interested, the problem with the energy stocks for me is that I got to worry about crude. One, I hate that. You understand? Like fundamentals don't matter. Growth, none of that shit matters. It's all about what crude's going to do. Okay? And you got craziness out there. I mean, if Trump gets elected, that's bearish for crude. You got a whole potential holy war out in the Middle East. That should be bullish for crude. Like, you have so many different wild cards. And you pull up a chart of crude, it'd be one thing if crude looked good. By the way, Colgate, look at that. There's your stock, by the way. CL. And I mean, this crude has been a nightmare. Absolute nightmare. And by the way, here's another thing. I've been saying by the way a lot, but here's another thing, right? You remember crude? You remember the run in crude? Remember how it felt like everybody and their mother was bullish crude, right? You had inflation, you had Russia-Ukraine war, you had so many different things. Goldman up in target prices every day, and you had like almost a parabolic move here. Okay, this is what you're going to deal with a lot of times after something like that. So this is the agony here, and it's been agony. But I don't know. I have no idea. I have no idea. The other action, this wasn't even. I mean, I played it today. I day traded it. I'm not swinging this name. Unity hockey stick. This probably was the most aggressive sweeper activity on the day, meaning there was a little bit of appetite for it. Majority, all short-dated, cheap stuff. So they were playing strictly squeeze. The one sweep that it caught that was half decent was Jan 17 and a halves. That was the only decent sweep in it. But this had a nice move because they continued to sweep it. Here's a 5 minute, and you can see the volume and the momentum here. But as I mentioned, I don't know, if you guys pay attention to what I write about the flow. Hopefully you do. Wait a second. Oh, did I put a dollar sign in front of it? Where'd it go? Is this in chronological order or not? Anyway, I mentioned that on you that. Oh, here it is. How do I? Okay. Wouldn't put a whole lot of weight on today's bull flow beyond just a bounce from a decent spot, and that's the reason I day traded. Mostly cheap activity, although there was that one respectable jam bet. All right, but you had a stock here playing dead, and you had a little bit of an appetite coming in, and it created some momentum. Maybe you want to play it for a couple of days, see some follow through. But I wouldn't. It's not somebody coming in and calling bottom or anything like that. And what I don't like about it, you guys know. I've been singing the same song for a long time now. This is a hockey stick. Okay? Plain and simple. No matter what good you tell me about the name, you're in the hockey stick blade. And that's not a good place to be in. It's almost like a magnet. Rally, get back into that hockey stick. Rally, get back on that blade. Rally, get back on that blade. Oh, no, we're getting away. Get back on that blade. It's amazing, right? Okay? As people were telling me at, $140, no, this Unity is going to change the game. This is the real name. At 120, at 100, can I get a 90? Can I get an 80? Once you're here, this is telling you hockey stick territory is coming. Okay? Because again, the least probability scenario is this. Possible? Anything is possible. But the least probability scenario after you're given this chunk back is a V-shaped recovery to new highs when a bubble pops like that. Okay, the highest probability scenario is it bleeds until it stops bleeding and then it becomes a dead heartbeat. And it trades range bound for a long, long time. And what people do is, because it's so long, they're only looking at this. You understand? They're just looking at the chart zoomed in. And they're saying, oh shit, we got to break out of a downtrend. Not knowing that you're in hockey stick formation. There's no breakdown of any downtrend. Whoop. But that's what happens. So much time goes on. Now, for this to turn around, snow is that way, Dan, to your point. It's not going that way. It's already there. Snow is a hockey stick. It's in that class already. But for this now some of these end up coming back. Believe it or not, AMD was a hockey stick back in the day. Okay? But for it to happen, okay, it takes a ton of time. And what you start to see is this. You understand? It works its way back. And eventually carves out the right side of that chart as things get turned around. The company changes its business. It cuts its cost. It makes acquisitions. It becomes profitable. It starts to grow profits. It's a process. But this valuation here was make-believe. That was a bubble valuation. So you need a lot to go right now for this to happen, right? Some of these names are not awful companies. They're post-bubble stocks. You got like legit software stocks that are legit companies that are profitable. The problem is they're still trading at 90 times earnings down here. You understand? Like, what's to your point, Dan? What's Snow's multiple? What's the multiple on Snow down here? It's got to be up there, way up there. I mean, they're profitable, right? I think Snow's profitable. Like Snow's a real company. It's not make believe. Yeah, it's just a lot of work, Drew. It's a lot of work. And like even legit companies end up becoming hockey sticks post bubble. Here, okay, Shopify. That was a legit business. Like this is one of the better ones. Okay, this was a leader, right? Like this had a ridiculous move. This was real profits, real numbers, everything. Here, this is what it looks like when things are going okay. That's what I'm explaining to you. You see that? That's constructive positive. That's the positive constructive version right here. Shop. Until things little by little start to improve and then maybe start to heat up. Right? Maybe a better economy, whatever it may be. And you'll start to see shop grind its way on the right side of this chart. But that's a that's a big move. So like people get into arguments with me. Oh, it's a real company. It's not going out of business. It's gonna be. I'm not saying it's not. I'm saying the stock is broken. You understand? The stock is broken. Okay, and it had its day in the sun. It reaped all the benefits. Now it's got to go through a lot of tough time. That's just the way it goes. There are few exceptions. Some hockey sticks battle their way out quicker than usual, but they're the rarity. They're the rare. They're not the norm. Oh, Dropbox. I saw it the other day. I forgot this thing was even around. Why am I lagging so bad? But this is just like a dead stock now, Dropbox, right? It's just death. Roku, that's a good one. Roku's a good one. Oh, I mean, that's perfect hockey stick seal. All right? Perfect. Whip. See, like right here? Doesn't look like much, right? But that was a big move here. Look at this. And then right back down. They're tough. Bill, that's a software name, right? Legit business. I mean, you got even the bigger names, the larger names, like MDB. They're expensive. You understand? They're just, after a move higher, they become so expensive. The reason why they had those big moves, you had a bubble. People would pay anything for them. You remember those software names? No one cared about earnings and price multiple or any of that shit. They were bidding things up just based off, the EV stocks, right? Lucid, Rivian. Now these are all great names. I traded all these names. When they were catching aggressive call sweeper activity and they were in play. They were the best things to own. Okay? One of my favorite stocks was this piece of garbage. Sweepers were like undefeated in this name. Undefeated. This Virgin Galactic. Supposedly taking people to space. I don't know what the fuck they were doing. Okay? And taking people to space in like 10 years, 20 years. Not even doing it now. They were going to do it. They were predicting they were going to do it in the future. But this thing, every time it dipped and sweepers came in and hit that dip, There was an explosion. It was the best stock. Now, I mean, this thing's been in hockey stick mode for quite a while now. Look at this. Yep. UPS. Yeah. You see, but I think too, Sahil, I think the takeaway from what all these names you're mentioning, that's how beautiful that post-COVID bull market was. All these names that you're mentioning were all fresh names catching fresh flow, fresh breakouts that nobody owned. That's why they were so explosive. Every name you're mentioning, all you guys, Peloton, Affirm, UPST. That's the beauty of a bull market, especially when the Fed greases it up like it did. That's what I'm saying. We used to have webinars. That's all we talked about were new ideas. That's all we talked about. We didn't talk about macro and this and that. Nothing. There was no reason to talk about anything else. What'd they sweep this week? Let's start going over all these names. What? Hold on. What did he say? Okay, I blocked out. I remember trying to figure out what the heck a crypto miner. I didn't know. Crypto miner. I forgive. That's nothing. That's nothing. You're talking about space, like space and EV batteries and EV cars. But honestly, JK, it didn't even matter. I didn't even know what they did. I couldn't care less. Most of the time, I didn't even know what these things did. I bought and sold the stock. I had no clue what they did. I told you guys, I mean, it's an infamous story right now because it was one of the biggest winners. Okay? SE, caught as good looking as action as you can see, flow wise. Okay? I never heard of the name. I had no idea what they were. Okay? For whatever reason, I still don't know where I came up with it. I thought it was a shipper, a tanker, a shipper. Okay? Stock caught, the flow was insane, catching action every day, bull risk reversals. People bought, sold it, made a score. People were swinging it, made a score. We had no idea what they did. After we're out of it, after the stock went bananas, then I was told what they did. The whole time I thought I was buying a shipper. Okay? But the moral of the story is when they're buying that aggressively, it doesn't matter what they do. They could shovel dog shit for a business. If they're opening new bull risk reversals in size and aggressively sweeping the living daylights out of a stock, it doesn't matter. It's going higher. It's going higher. Just off the buying itself, it's going higher. Nothing else. Right? Because if we're picking up on it, we're on the early side. Because I'm staring at the flow all day long. That's what I do. Once the flow really starts to heat up and everyone gets wind of it, everyone's going to get interested in it. And this is what happens when that happens. Okay? But the reason I'm telling you is, you're saying a crypto miner, you're trying to figure it out. I thought one of my biggest winners did something completely different than what they actually do for a business. I mean, especially the recent years, I've played the same way. I like to, with options, I swing trade. I try to avoid being nimble when I buy calls. You understand? I like to buy calls with a little bit of time. I like to be patient. When I want to be quick, when I feel I need to be quick, I want to play the equity. That's the way I look at it. So let's say I'm playing. I look at something that's catching action and I'm interested. Okay. If I'm looking to get in and out of it, right, I'm just looking for a quick move, even if I'm going to hold it overnight, but I'm looking for a short term move, I'm going to play the equity. If it's something that I want to give more time, I want to give a longer leash to, I like to buy calls there. That's how I approach it. That's what determines whether I'm playing the equity or I'm playing the option. Now, don't get me wrong. If it's a $2 stock, you know what I mean? If it's a $3 stock and the options aren't that liquid, I'm going to buy the equity. I mean, the equity is an option. You understand? I mean, I might mix in some calls as well if I'm looking to get a little frisky. But generally, that's the way I look at it. If it's something I'm looking to get in and out of, I want to be tactical about it. I'm going equity. And if I'm looking for a larger move and I want to be patient, that's when I buy calls. And the quick reason for it is very simply, like, you got to know what you're doing, especially if you're going to play with any size, getting in and out of options. You know what I mean? It's not the same thing. Like when I buy equity, when I'm day trading equity, okay, everything I'm trading is liquid. The equity trades 1 million shares a day. I don't have to worry about liquidity. But even though the equity trades 1 million shares a day, the options may be the complete opposite. Okay? So if I buy equity, what I usually do is I put in an order that's a little higher than the market just to get filled. Right? Where options, I mean, if they're not liquid, you get a buck spread in some of these things. Right? Like some of these illiquid options, you're down what you probably want to stop yourself out on between the bid and the offer. Yeah. So, a lot of people, obviously, especially when they're new to options, they don't take that into account. Now, again, the people who do take it into account, that's why they're having the time of their life trading NVIDIA. And all these names. Because the options are as liquid as the Atlantic Ocean. And you don't have to worry about that shit. Okay? The problem is when the environment changes and we're not in this environment anymore, and we're talking about the environment that we discussed a little bit earlier, a new leader environment, right? An under the hood stock picking environment. Just because NVIDIA calls are liquid doesn't mean you're going to make money, right? Because the stock may not do enough. And the money to be made is in all these other names where the options are less liquid. And that's just the game. They're different climates. You know what I mean? They're different environments. Like right now, if you are strictly a call buyer, like that's what you enjoy doing, that's where you find your most success, trading the same names, the liquid names, this has been your time. You're not going to get a better time than this. Okay? My advice to you is looking forward through your trading career, use this as the best case scenario, what you've been trading through. It's not always going to be like this. This is call buyers heaven. Call buyers heaven. Look at this stock today. Okay? Melly. Perfect example. Okay? These things aren't that liquid. I mean, we see sweeps. If I see 100-lot sweep, it's a big deal in Melly. Right? So now you got what is this? $2,000? Up 100 today? The only way you're going to benefit from it is buying calls. Right? I mean, you're not buying the equity in Melly for a trade. It's not happening. I don't like Mellys look great. I would love to buy Melly, but the only way you're going to play Melly is through calls. Okay? So like we're in that environment where you could bite off a little nice piece and you catch a move like this and you can get out of it. Okay? But there are plenty of environments in this market where a Melly doesn't move and kind of does this. And if you took size, good luck trying to get out of it without getting robbed. There are no scratch trades in that environment when you're trading those things. You're taking losses. Even when the stock doesn't move, that's the most frustrating part. The stock could go sideways and you're taking a loss because there's no liquidity. But this climate we're in, this is the epitome. This is it right here. Listen, right? Broadcom, well, split, but you know what I'm saying. Chipotle, Nvidia. These are all $500, $600, $700 stocks. Okay, percentage-wise, you know what I mean? The Bitcoin miners that we played, percentage-wise, outperformed Nvidia's move over the past 6 months, hands down, no doubt. Wolf went from $1.90 to what? All right? But option-wise, when you rattle off 50, 100 points, you're playing weeklies, those things can boogie. But what we've been in this bull market has been drawn up strictly for the call buyer. Plain and simple. Not the equity player, not anything else. And, that'll change. That'll change. But again, to answer your questions about how quick I want to be, whether equity or calls, most of the time. Did I use to play? You're talking about post-COVID. Both. So what I did is like an SE, okay? I would day trade the equity, but I'd have a position calls. So both. I didn't know what you were asking. So you were asking the COVID bull market, whether I used options or equity, both is the answer. Like the names I liked a lot that were catching the best action, I had conviction in, I would have positions, calls, sometimes even a little equity if the stock was not too expensive. But day trading, I would day trade equity only. I don't day trade options. There's nothing. There honestly, there's nothing. I wish I could tell you what's hot. There's no. Sometimes like we would run into a pocket of momentum in a certain place. Like recently, some of the space stocks like this, ASTS, RKLB, that sort of thing. That was before earnings. Now, it's actually the more defensive names, right? So it's a lot of big, staple, healthcare, those type of names. And they're not really a whole lot of new action. Like ABBV has seen some nice flow. This thing's been a beast. These aren't even really new though. This car, COHR, some recent put selling. RKT somebody brought up, but that's not really that new either. They started buying it over here. But they're buying the dip here, RKT, if you're interested. This is a rate cut play, I think, RKT. Gold has seen nice flow. I played it already. I own GLD, and I'm still holding a position in GLD. I sold my gold miner exposure. I had Nugget and JNug. I have a couple of like lotto names, cheap names, small positions in dollar wise. Um, I think it was one of them BTG. Yeah, BTG. I own a couple of these guys. See these guys? That maybe I get lucky and that I've been holding, but nothing major. Nothing major. But the gold miners, I mentioned a little bit earlier, catching the best flow, Newmont Mining. This is probably the best one, NEM. But look, okay, here's where that buying started up in Newmont. Right here. All right? So, like, it's still catching action. And there's some rolling involved, but what are you going to do here now? You know what I mean? So that was the same thing like with the gold miner stuff that I had. Like the Nugget, there's the circle. It's there already. That's where I bought Nugget. And it's actually right where I sold it now. I sold it right here. So I look like a hero for a couple of days. Bink off the niner. It's actually a little higher than where I got out. So again, this is not new. So the point I'm making is that's the bull market we've been in regards to flow. We see these little waves of momentum go into certain pockets. The gold miners, the space stocks, the Bitcoin miners, which was one of our better plays. But these are all, as we like to say, the eggs have hatched. They all hatched. Like now, I own pieces of these things, and I'm leaving them alone longer term. Like here's the Wolf. That was my entry on Wolf. So look at it. You had $1.90 to 6 and change. $1.90 to 6 and change. I don't know. That's a score in anybody's book. I told you guys that made my year. Without the Bitcoin miners, I had, considering the market, I had a lousy year. Because it hasn't been my type of bull market. Again, I'm not playing Nvidia, Avgo, and all these stocks. I'm not playing them. So, but yeah, so right now, to answer your question, there really isn't, there's nothing. I'm excited about nothing. I'm interested in nothing. Like there are a few names that have seen somewhat interesting flow, but I'm not jumping out of my shoes to buy any of them. What's another one recently? IFF. You had some decent buying in this name. International Flavors and Fragrances. It's a good looking name. But I don't know what flow. You guys are seeing flow that you're curious about? Tell me. And I'll tell you what I think. Why I'm not mentioning it. Like what flow has caught your eye that I'm not talking about? Because I see people on social media talking about flow and names every day. Like it's like they found Jesus Christ. I don't know what they're seeing that I'm not, but exactly. No new activity. Like again, Nvidia catches flow every day. Okay? Every day. And now it's to the point where when Nvidia's going up, it catches call buying. When Nvidia goes down, it catches put buying. That's what I think like McElliott is getting cautious about. Because if Nvidia starts to trade weak and that put buying starts to pick up, you're really going to get an aggressive unwind there. So it's been more two-sided in a lot of those names now. Because the semis, have gone through a little consolidation here now, right? Um, so yeah, to your point, it's not new action. But look, the OI changes. That's what I wanted to tell you about. Okay, like for example, Nvidia. Okay, the flow in Nvidia, especially weeklies, has been off the chain, insane. Okay, here's what the OI changes look like. Where'd it go? It's in here somewhere. Oh, I think I posted it in the regular room. Hold on. But just so you guys know what the hell I'm talking about here. Here we go. Okay, so these are NVIDIA OI changes from the action yesterday. Now, granted, there were like 200,000 traded on call line, weekly line, shit like that, right? The top line was these October 4th 108 calls, 29,000. Okay, then you had some puts here, weeklies that carried over. Then you had 22,000 weekly calls. Then you had 20,000 weekly puts. Then you had September 110 calls, 20,000 closed. Then, I don't know what the hell these are that closed. That might be a typo there. Weekly 110s here, 18,000 close. Okay? So now you're seeing these people talk about the flow in NVIDIA. Oh my God, do you see the buying in NVIDIA? Here's what's sticking to open interest. Okay? They're only looking at size call buying on one particular instant, one line. They're ignoring everything else that's going on within the NVIDIA flow. Right? But you see the story here. And here's the net number. Now, granted, some of these puts are sold, okay? But 200,000 calls added, 300,000 puts added. Does that sound bullish to you? Does that sound like an aggressive buying with conviction to you? You understand? But they get they get away with it because it makes them feel bullish about Nvidia, and Nvidia goes up the next day. Right? But that doesn't mean there's an edge in it. Right? That doesn't mean they're right in pretending that there's some huge new risk of call buying coming in. Because I got news for you. That's going to continue even while Nvidia stops going higher. Okay? So now if they're building positions off this information, they haven't been making any money for the past 3-4 months. Right? Because Nvidia's gone nowhere. So, I mean, that's what's going on there. So, you want me to pretend and say, oh, yeah, Nvidia, there were 22,000 weekly 114s bought today. Huge money. And just ignore that they closed 20,000 September 110s that are quadruple the amount of money? Or they closed weekly 110s? Or October 115s? And you know what a lot of this stuff too, what people don't understand, the process of rolling, that's how these professionals take profit. That's their strategy. They roll. You understand? So what happens now is, okay, they roll, let's say they start buying here. Okay? That's how they catch these trends. They go up, they roll up, strikes, and roll out. Goes higher, roll up, strikes, and out. And they continue to do it. Now, NVIDIA goes into consolidation. What they do now is a little different, okay? If there's a pullback in it. The stuff they rolled here is too far out of the money for them. They don't want to be that far out of the money, especially now a stock, the momentum has run out. Okay? If they want to still have some exposure in the name, they start rolling down strikes. Okay? So let's say they rolled up into the 150 calls, into the highs here. Now the stock comes down here. They rolled down those 150s to the 115s so they could be closer to the money. Right? So if I own 10,000 November 150s, okay, and I close those to roll into 10,000 November 120s because I'm underwater on a roll nonetheless, is that an aggressive bullish bet? Is that even bullish? Maybe you can make the argument, oh, he still wants exposure, so he still, he still feels good about it. I'll give you that. But there's no conviction or aggressiveness behind that. What's up, Theta? What did you think of Microsoft March 450s? Microsoft, let me see. Microsoft 450s. Oh, that's a block, right? Block? Am I looking at the right thing? I think it was a block. Let me see. Hold on. I saw that 20 million. Is that the one he's talking about? Yeah, 20 million, he said. Again, I don't know for sure. What I think, one, it's a block, so I kind of ignore it to begin with because the majority of blocks are negotiated and tied or rolled or whatever. But what I honestly think is involved there is they're replacing September exposure. So I'll give you an example. I'm just going to take the top OI positions here. Sweep, is that the one I'm looking at though? Let me see. I don't see it as a sweep, but I'll show you in a second. Hold on. So this is the order Theta's talking about here. I mean, this is the actually he's talking about. So here, right? This is the open interest, top OI positions in Microsoft coming into today. Okay. So look here. You got September 430s. You have September 445s. September 420s, 43,000. All these September positions by next Friday go poof. Okay? So let's say I'm a fund, right? And we've been we have Microsoft exposure. We've been rolling all year. Now I'm in September's and they expire next Friday. I don't want them to, if I still want exposure, I want to replace that, right? I got to do it by next Friday. So that's why you see these oversized blocks trade within these monthly expirations, especially the ones that there's a fairly large amount of open interest in. And because the market's been bullish, you have a lot of September exposure in the active names. Like Theta, you look at the flow, right? How much September call buying did we see over the course of the last few months? Anybody holding on to September calls, if they still want exposure in the name, they're going to have to replace it. Now, the thing we don't know is, and we will never know, there's no way of knowing it unless you know these guys personally, what are they doing? Are they replacing the whole position? Are they taking some money off the table? Maybe they're adding money? We have no idea. But, there's a good possibility that it's net neutral than anything else. So like that $20 million call buyer is a bit deceiving because it's not 20 million of new risk being put on, I guess is the best way to put it. But let me see the order you're talking about. I don't see a sweep, but I could be wrong. Ooh. Here's what I'm seeing. You're talking about this order here? That was done on just one exchange there, see? So that's not a sweep. This is a sweep here, weeklies. All the rest of these are blocks down here. You know, this looks like a roll here. September to 370s to October 370s. So, you know, you see what I'm talking about, right, Theta? Oh, yeah. So, you know, again, as much as, and you guys, listen, I'm as big as a degenerate as anybody out there. As much as I would enjoy bullshitting myself that something was bullish because I thought it was going to trade higher, you know, there's no good that comes out of that, right? That's bad. That's a bad habit. If you like a stock that much, you buy it whether you see flow or not. You're lying to yourself that it's conviction buying because you want it to be does no good. You know, it does no good. So you don't come on. I mean, we have the Steamroom. I come on webinars. You don't think I would love to come on here and talk with you guys? I complain about it all day long. You don't think I would want to come on here and talk about how all the different flow we're seeing, all the size we're seeing? You don't think I would love to spend time in the Steamroom screaming my head off about aggressive buying that we're seeing all day long? But I wouldn't, you know, I wouldn't be doing my job if I did that knowingly that, you know, knowing that it's not new risk being put on. So that's kind of the issue. And a lot of these active names, the flow is it's just cooked. It's just cooked. When you have the amount of buying we've seen in an Nvidia, in an Amazon, in all these names, for as long as we've been seeing it, the flow gets cooked. There's not much edge out of the flow anymore, if any edge. And what you need is that reset. You need that correction, not just because for the price action, for the flow too. You need all that buying, all those bulls to get scared off, to get shaken out. And then when the flow cleans up, then if you're seeing the type of size we're seeing now and the amount of it show up, then you have something. Then you have a signal. You know, but right now, God honest truth, right now for me, like a $4 million call buyer in Nvidia doesn't even impress me right now with the amount of action in that name. You're talking about millions and millions and millions. Theta tell you how much money worth of call buying this year in Nvidia, let alone not last year. Words don't even do it justice. That action is bananas in that stock. Bananas. So, but you know, that's too much of a good thing. That's how it goes. What are you going to do? There was a ton of money made in that stock. Yeah, I'm going to run to, you guys know. I mean, otherwise I end up yapping here all night. And I chew your ear off to midnight. I got to avoid taking a nap. I took a nap yesterday after the bell, a little after the bell. And then I woke up and I couldn't sleep forget, I was up till like 5 o'clock in the morning. Then I slept for 2 hours, and then I came for the open of the market. You guys probably saw me tweeting out charts at 3:30 in the morning last night. So I'm exhausted. I got to try to stay awake here. But that's the story. All right. Let's see how things shake out. You got an interesting 2 OPEX months coming up here. You got September next week with the Fed, and then you got October OPEX. It's definitely going to be interesting. I think there's going to be volatility. I think volatility keeps a bid. I could be wrong, but I think volatility, even if it doesn't go, doesn't have a spike per se, there I think there could be dip buying in both equities and the VIX in simple terms for the next 2 OPEXs. But we'll see how it shakes out. But again, ultimately, either we want to see aggressive, fresh buying come into new spots of the market, or we're going to need to work some of this off. And that's going to be via correction or through time, one or the other. So one of those 2 things got to happen. We'll see how it goes. In the meantime, hit and run. Try to make some money, play off momentum. Just don't get too greedy. Don't get too silly on entries. Don't overstay your welcome. And make some money in the interim while there's momentum. Actually, even on both sides, you guys have been playing well. So, all right, everybody enjoy the rest of your Thursday night. I'll see the majority of you mañana. To those I don't, have a good weekend. And I'll see you guys next Thursday. Have a good night, everybody.